Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Despite the US tariff news flooding the zone, the rest of the world economy is finding a way to carry on. But first we should note that a 15% tariff deal seems to have been concluded between the EU and the US, but one that excludes drugs and aluminium. It looks very much like the Japanese deal. And the tariff tussle between China and the US looks like it has been extended another 90 days. The pressure will be on European and Japanese companies to become 15% more efficient. But the US companies will relax, allowing to be 15% less efficient in their home markets. In the intermediate term, this won't be good for global US competitiveness. In a look ahead this coming week, we'll get our usual New Zealand monthly business and consumer sentiment survey updates, and our big end-of-month data dump from the RBNZ is accentuated because it is end-of-quarter data. In Australia, it'll be all about retail trade and inflation metrics. And Wall Street will be very busy, with many more large companies releasing earnings. But the big interest rate influence will be from the central bank decisions from the US, where no change is expected, and Japan, where no change is expected, and Canada, also no change. In all three cases, the real interest will be on their commentary. Underlying all this will be July PMIs from most major economies, plus more second quarter GDP data and many inflation updates. Over the weekend, China released industrial profits data to June. They reported another slide, down 4.3% from June a year ago, the second straight monthly decline amid persistent deflation pressures and growing trade uncertainty. State-owned enterprises experienced steeper losses, while profit growth in the private sector slowed markedly. Profit gains were recorded in many sectors, but one interesting one was in agriculture, where profits were up more than 20%. In Russia, as expected, they cut their policy rate by 200 basis points to 18%. They signalled another cut is likely in 2025. They see disinflation on the rise and household consumption lower. Part of that is due to the size of the diaspora of working-age men trying to avoid the death trap of the attempted invasion of Ukraine. In Europe, the ECB's survey of professional forecasters shows they don't expect much change in the coming year, with things constrained by trade questions. They see inflation easing slightly, mainly due to the tariff effects, but GDP growth slightly stronger in the short term. And the IFO Business Climate Index for Germany edged up in July from June to the highest level since May 2024, but the report was still full of cautious sentiment. In the US, and as expected, durable goods orders fell back in June after the May spike. Apart from aircraft and defence sectors, it remained pretty ho-hum. New orders rose just 0.1%. Non-defence, non-aircraft orders for capital goods fell when a rise was anticipated. The US Treasury 10-year yield is now at 4.39%, unchanged from Saturday, and the price of gold will start today at $3,336 an ounce, down $2 from Saturday. And American oil prices have stayed softish at just on $65 a barrel, while the international Brent price is just under $68.50 a barrel. And the Kiwi dollar is now at 60.2 US cents, up 10 basis points from Saturday, and up almost a half a cent from a week ago. Against the Aussie, we're unchanged at 91.6 Australian cents. Against the euro, we're stable at 51.2 euro cents. That all means our trade weighted index starts today at just on 67.7, unchanged from Saturday, but up 20 basis points from a week ago. And the Bitcoin price starts today at $119,210, and up 2.4% from Saturday. Volatility of the past 24 hours, though, has been low at just on plus and minus 0.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.